To introduce the panel, to start with, I have Marieme Niang Camara, the Managing Director for Africa at Wilben, who's traveled all the way from Dakar, the Africa Cup of Nation champions. So very nice to have you here. Wilben, as many of you will know, is a global sourcing, procurement, logistics, and supply chain company. And they deliver goods and services to clients worldwide. And particularly relevant for today, they also offer credit solutions and supply chain finance products. So nice to have you, Marieme. Next to her, we have Emuel. He hasn't traveled as far. He's a local. So Emuel Schoeman is the co-founder and managing director of Addendum, based right here in Cape Town. Addendum is a global award-winning fintech. They provide tech solutions to both companies and funders, to provide online supply chain finance effectively. So great to have you, Emuel. And then finally, Raja Debnath, who has traveled a long way, all the way from India. Those that were in the ACE stream yesterday may have heard a bit more about Veefin, but for those who weren't, Veefin is one of the world's fastest growing supply chain finance companies. And since 2018, it has been helping financial institutions across the globe automate and streamline end-to-end supply chain processes and deep tier finance.
Thank you.
A very interesting concept. So we've got this great group and a great topic. And I think maybe a good place to start, if I could ask you first, Emuel. We know there's an African trade finance gap, and we know it's probably got worse over the last few years. I think that's clear. But with your business and supply chain finance and the experience you have on the ground, do you see supply chain finance as being an effective way to fund and support small businesses? Do you have real life examples, I expect?
Yeah. No, we definitely have lots of real life examples. I think if you just allow me to maybe share a personal story, just as a starting point. I have 3 kids at home, and we sat around the dinner table one evening, and they asked me, what do I do, right? So as a service provider, you obviously sit in between the banks, the big corporates, and the suppliers. And I essentially shared, this is what your dad does on a daily basis. And a couple of months later, a friend came to visit, and he basically said, listen, what do you do for a business, for a living? And I asked my kids to tell this gentleman what I do. And my son essentially told him, my dad does deals with big banks. I think he's always impressed with the bankers and their beautiful suits. I see a lot of them walking around here. Some of them are not here today. I think the after party was a bit too good last night. So he's always impressed with that. My oldest daughter, she's a teenager. She loves shopping. So her story was, my dad helps this one retail company in South Africa to build more stores, essentially, because we helped them to free up some working capital. But the youngest one, my 8-year-old daughter, said, my dad helps small businesses and he gives them money. Because I told her a story about this one lady that bakes rusks, and she sells it to 2 of our retail customers, and she gets money early at a really good rate, etc. And she was really impressed with that. So today is really like a ode to her, and talking about little suppliers here. So as a business, Addendum, yes, we have tech. We are ultimately a fintech company, but we see that as an enabler for supply chain finance. But what we really do is the services that makes this work, which means we get a lot of exposure to big corporates. We help them in their businesses. Don't want to spend too much time on that because there's not that many corporates here. We essentially help them with everything from spend analysis, building the business case for supply chain finance, socializing these programs internally, etc. Then obviously with the banks, we have lots of partnerships, lots of banks here that we partner with and fund, and we support them, and we introduce deals to them, and vice versa. We support their customers with the deals. But what we do at the SME level, we literally meet with every single supplier. So we have thousands of these suppliers that sell their invoices on our platform on a monthly basis. And we met with every single one of them and discussed the impact that supply chain finance will have on their business, both from a balance sheet, an income statement perspective, but then also understand their businesses. What do they need in terms of funding? How are they going to grow, etc. So we've built a relationship with thousands, of these suppliers. So of course it's wonderful. Supply chain finance, everybody here knows, Raja knows as well as everybody, it's an amazing product, right? What other product can you electronically register? You can log in, you can click a button and you get money in your bank, within 24 hours. It's a great product. But there's a big but here, right? It's a small part of any SME's funding requirements, right? I mean, the supplier in our business that has the biggest access, they can access 10 supply chain finance programs, so that covers a lot of their debtors book. But a typical supplier can probably access 2 supply chain finance programs, which means there's a massive gap there, right? So, when we talk supply chain finance, yes, super efficient, it's amazing, but it's not nearly enough, right? There's a lot of other stuff. So what do we do to fill that gap? A supplier will naturally come to us, right? Because they use our supply chain finance solutions, really cheap, really simple, and inevitably they come to us and say, I have these other 6, 7, 8, 10 debtors, can you help me with it? And we fill that gap using a product called Selective Receivables Finance, where they can upload invoices to our bank partners and sell it there. But then beyond that, we can't just talk about SME funding and just talk about invoices. We need to talk about inventory finance. We have there's a lot of amazing companies that are now offering inventory finance, where they're literally funding the goods from the port of shipping all the way through to delivery. So we have built relationships with those guys so we can do the introductions there. But then beyond that, there's seed funding, all of these sort of things that SMEs need. So it's only the start of the journey, especially supply chain finance. I mean, there's a massive gap in Africa. Some countries haven't even implemented their first supply chain finance solution. So there's certainly a lot of opportunity to expand the product and do more. But what has been done so far is amazing. I think we have over 100 written testimonials from suppliers saying how much they love this, how amazing it is. And they ask us sort of on a daily basis, can we expand it to other customers? So, yeah.
That's fantastic. And every supplier is the next big corporate potentially. So the opportunity is really there to grow that. And of course, when you talk also about inventory finance, the platform and the tech is amazing, but as you say, it's an enabler because there's still something on the ground behind it. There's the real people, the real goods that relate to every single one of those deals. Maybe just to follow up, Raja, if I could ask you, because you've in a similar field, similar tech, but you got experience in India, and how can we translate that into Africa, which is 54 different countries, not just one. And have you seen in India that what you're doing there has improved access to finance for SMEs?
Sure, thanks. So just to clarify, it's just not India. So we work across the globe. And in my previous role with the International Finance Corporation, I was working across multiple countries. Okay? And that is something which we see in most places, and the kind of work that Addendum is doing. When you're starting off a supply chain journey, which Africa is, you've been hearing of supply chain a lot, but I would still say we're at the start of the journey. So companies like Addendum have a very, very massive role to play because they are in effect teaching the banks how to go about doing this business. Okay, so there's a lot of capacity building which they are doing. So we as tech providers, we actually play a complementary role to what Addendum is playing because they are doing the work on the ground in showing how onboarding happens. So I think the biggest challenge in the supply chain finance world is how do you onboard large corporates? Once that's done, how do you onboard their suppliers and dealers? We haven't seen too much of the dealer end in Africa, and that's where the bigger market is. The bigger market in countries like Africa, you look at any emerging economy, more than the suppliers, it's the dealer side, the distributor side, where you require financing. You have structures which can be brought into play where you can de-risk the large corporates. Because today, in the absence of financing by large banks, the entire risk of financing the dealer side is borne by the large corporate themselves. So it's 100% risk on their balance sheet. And that's where banks with structures can come in and at a fraction of the risk they can actually help the corporates de-risk their balance sheets and get in. So that's one big. So I and Emuel were talking yesterday on this, that's the next place where I'm sure he'll be getting into, because there's a massive demand. The bankers that we've spoken with here, everyone spoke of that yes, we would like to go there, but there's the risk angle which is there. How do we sort for that risk? But even before you do SME financing, because there's a lot of SME financing programs which are being run by banks in Africa, but I would still say that's a more riskier option. So if you look at the risk spectrum, the lowest risk spectrum for SME financing is a supplier finance deal. It's right there. Post-supplier financing, it's the distributor financing leg, and then the SME leg. So in Africa, you have supplier financing, you have SME financing, but you do not have the mid-risk program which is there, which is the distributor financing leg. So I think that's one option which is there of actually providing financing to the SMEs in Africa. So that's a massive demand in most markets. India, Bangladesh, Indonesia, Vietnam, all these markets, you see distributor finance being a much larger piece of the SME financing portfolio than supplier financing. So that's the next opportunity I think bankers here should be focusing on. And that's the reason why we are here. The reason why we have moved here is, at the end of the day, banks will work. So banks will work with players like Prime Revenue. I'm hearing Prime Revenue name. Banks will work with Addendum. Banks will work with Finverity. Banks will work with all these players. However, banks will have their own proprietary platforms also. Okay? And that's where companies like us come in, provide proprietary platforms alongside the complementary platform which are there in the market. And the next piece, some of you were there yesterday or not, in the Trade Tech Showcase, where we spoke about deep tier supplier financing. That how do you, on the supplier financing side right now, what's happening is, anybody who has visibility at the corporate level will say not more than 25 to 30% of the corporate's entire payable gets discounted by all banks put together in the market. So I'll repeat this. If you're a large corporate, your payables, banks would be ready to discount those payables. But all banks put together in the market do not discount more than 25 to 30% of those payables. And that is because the tier 1 SME, the SME who's actually supplying to the large corporate, does not require financing all the time. So you are sitting basically as bankers with 65, 70% of good quality payables of large corporates, which could be discounted. What do you do with it? How do you push it down the chain and allow the tier 2 suppliers who are supplying to the tier 1, how do you finance that? That is called deep tier supplier financing, and that's the next massive opportunity for the market in terms of pushing credit down the chain. So whatever is the book that banks are running right now on supplier financing, technically you could triple the book if you just go deep without taking a single penny's additional risk. That's the next opportunity. And we have a couple of banks who came up, they would like to run this. I'm sure we'll very soon hear about deep tier in Africa.
Excellent. And Emuel, maybe before I go to Marieme, have you come across deep tier finance locally or looked at it? Has there been a success or are there challenges here?
Yeah, it's a really interesting concept, and I can see how it works from a tech perspective. I think what's happening practically in South Africa, when we have these discussions with suppliers, right? One of the points that we discuss with them is, what can you do with this capital, right, that's available to you? And essentially, one of the obvious things is pay your own suppliers early, right? Because a lot of suppliers is giving 2.5%, 3% discount for immediate payment. And if it's going to cost you 1.5%, for example, it just makes logical sense. Take the money, pay your own supplier early. So we actually go through extensive exercises like that with every single supplier. So if there's an opportunity to do it, these guys are selling the invoices to a large extent, and then using the cash, not through a platform, but just essentially using it themselves to pay suppliers early. So you do see a lot of that. Of course, there might be missed opportunities. Listen, there's always missed opportunities in this space. But companies are awake to the opportunity of taking cash and distributing it, but not detracting from anything.
Well, watch the space, I think.
Yeah, absolutely.
And maybe to move a little away from the tech platforms, because I know, Marieme, you've got a few thoughts around how the African Continental Free Trade area could also have a positive impact on, opening up opportunities for SMEs. With this new potential single market of 1.2 billion people, where do you see those opportunities, and particularly in the supply chain finance space?
Yeah, so Wilben, we are global merchant traders, so we were very excited to see actually the AFCFTA as like one single market, which spans, from Egypt to South Africa, and then from Senegal to Djibouti. So, we are covering about 1.2 billion people with a GDP, I would say, of 2.3 trillion dollars. So it's a huge market for us. And yes, so there is definitely room, for making trade finance available to a wider network. We've seen, especially on the SME segment, with the AFCA providing opportunities on offering more credit, and that's really what we do. Intermediating between importers and exporters, but also offering credit solutions. So given that access to finance remains difficult for SMEs operation, therefore availability of sustainable trade finance, especially for SMEs, will remain the focus for the AFCFTA. And we've seen that we've had good initiatives with them in the Nigerian, but also Ghanaian market. So we have seen some DFIs developing actually programs such as factoring. We heard Afrexim Bank talking about a factoring program yesterday, whereby actually what they would do is just the suppliers would be actually selling their receivable on open account and just, to third parties, so quite interesting for them. And so what banks do is that they would actually offer extend credit and financing to those factoring companies or banks who are actually participating in those factoring programs. And so this is also advocating about everything about enabling legal and regulatory environment. We've seen that, and we've seen the regulatory environment, progressing and a lot and really improving, for our markets. So I think looking at that, talking about the tech side also, we've seen a program such as PAPS. So, EcoBank was talking about the PAPS program, how on the technology side, it is improving actually the payment system process that we see. We also see another program with the African Union, which is also a settlement initiative that is looking, the name is, I'll just get the name, sorry. So that's the Africa Smart Finance and Digital Banking Initiative that the African Union has also put in place, especially for SMEs. Also, what happened is also bank would go into that program. We would get actually cheaper interest rate and then those cheaper interest rates will also reduce actually the cost for those SMEs, but also a better turnaround time of the loan processing. Sometimes moving sometimes from 3 months to 3 days. So all of these programs, but especially on the factoring side, is really what the AFCFTA is bringing actually to our world of trading and offering credit solutions in general.
Excellent. We did hear in the earlier panel some of the challenges that were being raised with the free trade agreement. There's some logistical, there's some practical, there's some structural issues that need to be fixed. But, Emuel, do you do a lot of cross-border Africa deals? Do you think there's opportunities with the free trade agreement for you, just even increasing the number of the people that are going to be out there building businesses?
Listen, that's exactly what it is. Anything that takes cost out of the system, right, has to be positive. Anything that promotes trade and make people do more business cross-border, that has to be good for funding. A more open market means potentially easier access to common currencies like the dollar, right? And that's where there's a massive issue in a lot of parts of Africa with doing foreign supply chain finance programs. But we see a lot of local currency supply chain finance programs in Africa anyway. But anything that increases it, I'm not an expert in that space whatsoever. But anything that takes out cost, listen, I'm a big supporter.
Yeah. No. So just maybe we could take a break there. I know we've got a few minutes left. Are there any questions for the panel before we maybe move on to one last question?
Yeah, thank you very much. I had the panel. My name is Onyebuchi Meme. I work for Standard Chartered Bank. I'm not one of the bankers that did not return today. I'm just responding to your comment. We had a good time yesterday anyway, I acknowledge that. Yeah, the panel discussed dealer financing. I dare say it's one of the first supply chain finance products that actually existed in Africa, but it did fail a lot in many of the countries because, as you know, the risk, unlike the supply chain finance where the risk rests with the bigger anchor, with the bigger credit risk, the risk of payment in dealer finance rests with the smaller buyers, and that's often a challenge. And in reality, the financing cost itself is higher because of the, the regulatory requirement on on clients with smaller credit grades. And we actually found many of such programs failed. How does your technology help to improve that risk? Is there any transparency or visibility that it provides? Is there any anchor engagement that it increases? I'm just looking at this, yeah.
Sure. So to understand how a dealer financing program can be better than a SME financing, let's look at what is the risk in SME financing. The first risk in SME financing is that the funds which the SME may take would not be used the end use. End use is a big challenge in SME financing. The second is diversion of funds, that you take the funds, you sell your goods, then you don't return the money. That's the second thing. The third is you do not actually have clear data about the SME in terms of exactly what they're doing. Now translate all of these risks into a dealer finance program. The first thing is, in a dealer finance program, you do not give money to the SME. The money is paid to buy goods and sell it and give it directly to the large corporate. That's point number one. The second is that when you give money to the SME, we don't give money to the dealer in this case. The dealer is expected that you will give a 30, 60-day period. The dealer will pay back the money faster. Okay, so you don't give, like in SME financing term loans, you give very short term. So if you lose money, you lose a small amount of money for a short period of time. You have structures in which you have stop supply agreements in place so that the large corporate stops supplying. The kind of dealers that you actually choose, you don't choose dealers of just about anybody. Okay? You have to choose the right kind of anchor who have a large market share in the region. Okay? You'll have to choose the top 5 anchors. You'll choose distributors who are dealers for whom this business matters. They just can't shut the business for tomorrow. So it's more than the tech. Tech plays a part in bringing transparency. Tech plays a part in bringing in innovative interest rate structures. Tech plays a part in seeing that you incentivize the dealers well enough that they pay back early. That's tech. However, dealer financing from a bank perspective is the way you design the program per se. So the risk comes down drastically if you design the program right. And that's what, so we are just not a tech company. Because of the work that we have done in the past in terms of advisory, we bundle in advisory and technology when we go to banks. So if banks require advisory from us, because even today, we work with the Asian Development Bank, helping their clients in designing supply chain finance programs. So we can have a chat, happy to help you design a dealer finance program, which would be substantially lower risk than your SME financing.
There's one more question.
Michelle.
Hi,
Michelle?
everybody. Michelle from GPH. I'm really curious to hear from the panel how you feel, with this new world of like digital assets and decentralized financing that is coming in to serve small, medium enterprises. Do you see that as an area where you are going to collaborate, or you see it as competitive? What do you think about it? Because we're seeing more and more small, medium enterprises turning to these other alternative sources of finance, because they're finding it such a struggle sometimes to get access to, supply. So I'm just really interested in your thoughts. Thanks.
Yeah. I'll take that first, blockchain and all the rest and all the funky stuff in between. There's one or two big supply chain finance service providers that use blockchain. Obviously, from a technology perspective, very secure. But that's certainly not their main selling point, for example, right? I mean, if my infrastructure is safe and secure and trusted, SMEs certainly don't care whether it's on blockchain or on my own network or in the cloud or on Amazon, etc. But where I see that playing a massive role in future is potentially, giving people the ability to trade in different currencies, right? Let's put a dream out there of having an Afro coin, right? Which can be used by all Africans cross-border, talk about, the African Union initiatives, trading cross-border in Afro coins that are highly liquid, traded by different banks, central banks recognized. Listen, that can only be good, right? Anything that improves liquidity and gives people the ability to get more dollars, more funding, listen, I'm all for it. But that's where I see more of a role as opposed to infrastructure security play on blockchain. It's less interesting for us. Yeah.
Marieme, do you want to answer?
Yes, so we have a sovereign fund in Senegal, and what they do is actually, so they promote, SME financing, but also, entrepreneurship, development for the young and the women. And they have created actually a platform. On that platform, actually, so the SMEs and the women, the young with project would come and apply into that platform. And what they will do is actually they will then aggregate the loan and take it actually to better funds or actually just actually to the government for direct financing. They can also come to us because what we would do is actually the procurement and credit part. So we would look at actually in terms of buyers, we will extend credit to buyers for longer term credit to them, and thus then better matching their cash conversion cycle. What we would do to suppliers is we would pay them cash. So that would give them also then cash flows for their manufacturing and production constraints. So in the middle, as intermediaries, also we are participating in those tech and digital innovation, but going through actually sovereign funds. So this is a typical example of the Senegalese market.
Nice.
Brilliant. Well, I think we're probably out of time. So I'd like to just thank each of you very much for your insights. Thank you to the audience too, and for the questions. It's always good to know there's people listening, especially just before lunch. So thank you, everybody. And I think there's one more session.